Hi, welcome to the Market Alert for Wednesday the 14th of June 2017. So yesterday we see the pound moving higher. I'm just going to speed things up for you. We're waiting for the release of the UK CPI and RPI figures at 9:30, and what you should note about the high impact news item that's drawn on the chart here, that the bar completes before the news is released. So it's the bar after is when the news is released, not on the actual pink line there. So we see the market having moved higher from the buy signal. The market traded sideways really to prior to 15 minutes before the release of the CPI figures, and then you'll see this is just before, and then you'll see me closing or removing the lines off the chart there just as 5 minutes before the news is released. The market doesn't know what to do, it's just waiting, anticipating what the figures are going to be. And again, I'll just speed things up a bit, and there you see the market trying to move higher, and then just get out of the market for the CPI, non-farm payrolls, all those types of news items and central bank announcements. But otherwise, the news items don't seem to make much difference these days, unlike in the past. So 30-point profit on the pound, and then we had the release of the CPI figures, and we can see that they'd increased to 2.7 to 2.9. This time last year it was 0.5, so a 500% increase in inflation. I'll look at it that way. And also the RPI there also increasing dramatically as well. The afternoon session, well, the Dow, as I warned in yesterday's market alert, is waiting for Yellen. This is the Dow now. We see the start of the session. She's going to be speaking at 7 p.m. this evening. The consensus at the moment is that rates are going to be increased, but who knows until 7 p.m. this evening. So you can see yesterday the market stuck in this sideways range. We've already had 5, 10, 15, 20, to nearly 25 minutes of nothing. There's a pretty good clue there the market isn't going to do a lot, and the market then fills a buy signal. There's resistance at the all-time high, which you can see there with the red line. This is at the all-time high that was made on Friday. The market comes back, trades sideways, and then when no one's looking, just whip the market through and make a new all-time high. And that's where the market stopped at the scalp, rescaled the chart. We've got another couple of attempts there at new highs in these 2 points here and here, and then we see the rest of the session moving sideways. We had one more attempt to pull in a high at this point, and then the remainder of the evening session, late afternoon, just trading sideways. So let's have a look at a couple of daily charts here. Let's start off with the Dow. As we're talking about the Dow, we can see we've got the new all-time high here at 21,332. Again, all done on low volume. So it's amazing how they're able to bring these markets up, whereas at one time they had to be buying in the markets. Now they can just levitate these markets to the upside. It's quite staggering, really. So see the market moving higher and then sideways to lower on the overnight there, a bit of resistance. In the pound, just bring this down. So have a look at the daily chart, get an idea of where we are in the bigger picture. The market moving back yesterday, and the inflation figures prior to the release of the inflation figures, and then continuing higher through the remainder of the session. The increase in inflation is a potential there for a rate increase at some point, which is positive on the pound, which is why you saw the pound move higher. So now news will probably revert back to May, how long she can stay in her job, and then also the deal with the DUP still in the background as well. So we can see the market sideways to lower once again. Now news wise for today, well, there's only the big event really. We've got a lot of other stuff out for the US in the pre-market session. As you'll see here, we've got the retail sales core CPI, and then on to crude oil inventories, and then the big stuff, which is going to be the FOMC. And we've got, if you look here, you can see that we've got a situation where the forecast is for rates to increase from 1% to 1.25 once more. Is there anything at 9:30 that could affect the UK market? Let's have a look. We've just got average earnings and unemployment figures, which are out at 9:30. But other than that, not really. Average earnings index 3 monthly is high impact, but I would have thought the claimant count, which used to be called the unemployment figures, is going to be released at 9:30 as well, but it's only medium impact. And finally, let's have a look at the implied volatility. Implied volatility is down, which you'd expect it to be, from 863 to 811 as the Dow made new all-time highs, again flirting with these lows down here. And again, I'll reiterate it, it's when we get down to these levels, then you will see the market make a correction, or bigger than a correction, 20% plus in the Dow. But again, we can't predict the date all the time, but that doesn't really matter. The main thing is to have enough volatility in the Dow so that we've got the market trading through the scalp targets. That's what's important. But this gives you the bigger picture of what's coming down the line. And again, that's also something to keep in mind, that when we get down to these sort of lows, you can get a sudden drop in the intraday charts as the market then takes on board what's in the background. Right, that will do it for today. I'll let you know if anything else happens, but keep in mind that the market could be very quiet up until 7 PM as it waits for the Fed's decision. There's one or two patterns. You either get the market continuing higher, ready for the market to either to not increase or increase, and then the market takes a view. Otherwise, it trades sideways and just waits for the news. So we'll see after the first 10 or 15 minutes, because you will see the market either sideways or making a move from the off. Right, that's it. As ever, thanks for watching. See you in the next one.